Silver just got absolutely smoked. Down 22% from the all-time high, down 17% in the last 24 hours alone. That's $1.1 trillion wiped off the market cap. Right now, silver's trading around $95 on COMEX. Gold is back under 5,000, and this is where things get serious. In our last video, we laid out the exact technical levels to watch. We told you straight up, the 150-hour EMA, add it to your chart, was the key support. And at first, it held. Price bounced about 10%, but then sellers stepped in, snapped that EMA, and that opened the door to the 90-95 support zone we flagged. And here we are, right now, testing that level. Hold here, or we break and head to 86. I called this out live on X. If you're not following me there, you're missing real-time charts and data I can't post anywhere else. I'm just warming up. The handle is OG John AG on both X and YouTube. It's verified, can't be copied, so ignore the fakes. I don't sell anything. No courses, no signals. Just raw, unbiased info so you can think for yourself. Drop a comment with where you're watching from and where you think price goes next week. I read them and will hit your questions. Now listen up, because this is the part people need to understand. While COMEX silver is trading at $95, Shanghai silver is trading at $136. That's a $36 premium. 36. That's the biggest premium we've ever seen. Physical silver in China is trading 37% above paper silver in New York. Let that sink in. Physical is 37% over paper. The so-called safe haven asset is now moving with crypto-level volatility. Silver got nuked $20 from 115 to 95. Gold erased $4 trillion in 24 hours. Silver erased $1.1 trillion. This isn't normal. This is forced liquidation. This is the paper market cracking under leverage while the physical market is screaming the exact opposite. Now check these ratios. The gold to silver ratio just jumped to 51 to 1. Gold is priced 51 times higher than silver. Meanwhile, the mining ratio is 1 to 8. For every ounce of gold mined, 8 ounces of silver come out of the ground. The COMEX vault ratio is 1 to 12. For every ounce of gold stored, there are 12 ounces of silver. The LBMA inventory ratio is 1 to 3. So let me get this straight. We mine silver 8 times faster than gold. We store it 12 times heavier in COMEX vaults, yet it trades at 51 times cheaper. Does that make sense to anyone? And here's the kicker. Silver vaults are getting drained day after day. Inventory is falling while the price ratio keeps stretching wider. Connect the dots. Now let's talk about what kicked off this crash, because the timing is sketchy. Gold and silver started dropping right at the open of China trading, according to reports. Then the London Metal Exchange suddenly announces technical issues and delays its opening. And right as LME delays, silver gets wrecked. $20 straight down from 115 to 95. Technical issues, huh? LME delays the open and silver gets sent straight down the mine shaft. There's not much fundamental news driving this, except one thing. Trump's expected Fed chair pick today. That's the catalyst everyone's watching. If Trump picks a conventional Fed chair, markets might chill out or keep dumping. But if Trump shocks everyone and names Judy Shelton as Fed chair later today, gold and silver could rip intraday, and it could mark the beginning of the end for decades of price rigging. Let me break down why that matters. Judy Shelton is an economist, a former Trump Fed nominee, and one of the loudest voices for sound money out there. She supports a gold standard to rein in inflation and debt. She's pushed for gold-backed bonds as a way to slowly bring sound money back into the system. Her ideas directly threaten the Fed's unlimited money printing machine. Under a gold standard, the dollar is tied to a fixed amount of gold. Inflation gets capped because you can't just print endlessly. Government debt can't spiral because spending is tied to real assets. Stability comes back. Confidence comes back. When Trump nominated Shelton in 2020, the pushback was brutal. Why? Because her ideas would shut down the Fed's ability to print trillions to bail out banks and pump markets. A gold-backed system forces accountability. Her nomination got blocked by a narrow Senate vote, but her ideas didn't die. In fact, they've gained momentum. Recently, Shelton proposed gold bonds. Bonds denominated in gold, not dollars. Investors could redeem them in gold at maturity, sidestepping fiat devaluation. That creates a parallel system based on real value. It doesn't replace the dollar overnight, but it lays the groundwork for sound money. If Trump picks Shelton today, that's a full-blown policy shift. That's an existential threat to the paper manipulation game. Decades of price suppression through derivatives and concentrated shorts would suddenly be under fire from the Fed itself. That's why today matters. That's why this crash timing smells off. That's why silver got smashed right before a potential Fed bombshell. They want you to think this is the real price. It's not. A $36 Shanghai premium tells you the real price. A 51.1 gold-silver ratio against an 8.1 mining ratio tells you the real price. Vaults draining while paper crashes tells you the real price. Now here's what most people are missing. In yesterday's video, we mapped this out perfectly. The 150-hour EMA held, gave us a 10% bounce from 108 to 117. Then it broke. We said if it breaks, early 90s is next. That's exactly where we are, testing 90 to 95. Hold it, and we move higher. Lose it, and 86 is next. The roadmap is playing out step by step. But here's what's different this time versus every silver crash before. The physical market is not following paper down. Shanghai premium, $36, that's unheard of. In past crashes, premiums collapsed. Sellers panicked. Not now. Premiums are exploding. Physical buyers in Asia are paying 37% over COMEX spot to get metal. They're not scared, they're loading up. They know this paper price is fake. Shorting won't fix shortages. It only makes them worse. The banksters are digging their own grave. Every dollar they smash price lower, the Shanghai premium blows out wider. Every ounce they short, physical buyers take delivery. Every paper raid gets met with stronger demand. They're losing control, and they know it. Now let's be real about downside risk. After a 22% crash, damage is real. We dropped from 121 to 95. That's brutal. If 90-95 fails, 86 or lower is on the table. Momentum is bearish short term. If you were leveraged, you probably got wrecked. Tight stops got hit. Margin calls rolled in. 1.1 trillion erased in a day is a liquidation cascade. And there's another risk. If Trump picks a standard Fed chair and not Shelton, the manipulation game could keep going. Silver could get pushed lower. More technical levels could break before a real bottom forms. Crypto is getting smoked. Bitcoin down to around 81,200. Stocks are weak. Gold under 5,000. This could be a full risk-off move. Even safe havens get dragged in that environment. But here's why none of that changes the physical thesis. The $36 Shanghai premium is the largest ever. That's desperation, not weakness. Buyers are front-running a squeeze. The gold-silver ratio at 51:1 versus an 8:1 mining ratio is screaming undervaluation. Historically, when this snaps back, silver explodes. Vaults are draining. COMEX inventories are shrinking. LBMA inventories are under pressure. Shanghai is pulling metal east at massive premiums. This divergence cannot last. Either COMEX price rises to meet Shanghai, or COMEX loses credibility, and Shanghai becomes the price setter. And once again, yesterday's technical levels are playing out perfectly. 150-hour EMA, held, bounced, broke. Early 90s hit. Now it's decision time. So let's wrap it up. 3 takeaways. Number 1, the technical roadmap is playing out exactly as laid out. EMA held, bounced 10%, broke, price hit early 90s. Now we're testing 90-95. Hold it and move higher. Break it and 86 is next. Number 2, the physical paper disconnect just hit an all-time extreme. $36 Shanghai premium. 51.1 ratio versus 8.1 mining. Vaults draining. This isn't a broken market. This is paper manipulation colliding with unstoppable physical demand. Number 3, Trump's Fed chair pick today could flip the script. If Judy Shelton gets picked, her sound money stance is a direct threat to the paper system. If not, the fight continues. But the cracks are widening. So here's the big question. Does 90-95 hold, or do we flush to 86 first? And if it holds, does a Shelton pick light the fuse? We're at a major inflection point. Technicals are lining up. Physical demand is maxed out. And a policy shock could drop any moment. Stay sharp. Watch the levels. Watch the Fed. The next move could be historic. Do your own homework. Know the risks. If you're over-leveraged, this volatility will eat you alive. If you're stacking physical and understand the structure, this could be the shakeout before the real move. Time will tell. Invest with logic, not hype.